Well, good afternoon, ladies and gentlemen. How are we feeling this afternoon? Excited, excellent. Oh, wow, this is great. You're happy to be out on Wednesday afternoon, aren't you? Ladies and gentlemen, welcome to the National Finance Brokers Day for 2018. Way! Thank you for leaving the front seat empty. I really appreciate that. That's always a good start. This is the fourth year we've had the National Finance Brokers Day, and my first year being involved with it as MC. We have a fantastic lineup of speakers, ladies and gentlemen, some experts in the field that are going to talk to you about some of the challenges, some of the opportunities, and some of the disruptions within the broking business. Now, how many people in the room are actually brokers? Okay, how many people are not brokers? Excellent. Well, we'll convert you. Ladies and gentlemen, my name is Sam McCool. I'm your MC for today. You guys are in the mortgage business. You may have heard of another Sam McCool. Have you heard of the other Sam McCool? I am not that Sam McCool. I'm not a former lawyer. I'm not the Managing Director of Mortgage Settlements Australia. I know nothing about mortgages, nothing about settlements, very little about Australia, ladies and gentlemen. I'm here just to host today, and I'm here as a consumer of finance, which I believe half of the audience watching at home are also doing. So we're here to learn all about the full suite of services that you guys as brokers offer. We're hoping that this event gets bigger and bigger every year. Bigger, better, and hopefully next year be bigger, better, broker will be the tagline they're going with. We want to thank you all for coming along and taking an hour out of your time. We're also thankful to have this wonderful venue, Stone and Chalk, here as part of the Sydney Startup Hub, and Hasching, who are obviously residents here, will be talking later this afternoon. Now in the room today we have about 100 or so people. But besides that, around the country, we have people watching via the Facebook live streams. Give them a big wave, ladies and gentlemen. Turn back there. It's actually the camera's there. Yeah, there you go. Excellent. Big wave to all those people watching from home, from their home or from their office or from their home office, whatever they want to say to the ATO. Ladies and gentlemen, they are celebrating the National Finance Brokers Day. There are people like Anita Marshall, who this morning in Taylor's Beach, Anita Marshall from Advanced Finance Solutions, who got together with all her clients and had a morning tea, coffee and cake day to reconnect with all her clients. And Louisa Sanguera from Zippy Financial in Sydney, who had a coffee morning this morning with 25 of her local business clients. So it's a great excuse for you guys to get out there and reconnect with your clients and with your community. Now, ladies and gentlemen, it is a vision of the founders of this to make it a bigger and better day every year. My vision personally is for this to not just be a 1 hour event like this in Sydney, but actually to become a national day and a national public holiday. What do you think? Hey, we get a full day off where everybody can get out there and look after their finances, make appointments with their brokers, make appointments with their lenders, sort out your insurance, your car, your house, your commercial property, but do it all in one day, ladies and gentlemen. What do you think about that? Hey? Public holiday, I'm going to lobby for it. I think it's time that people, to take a day out from working for money and work out how their money can work for them, yes? I think JFK said it best, ask not what you can do for money, ask what your money can do for you. I think that's what he said, right? Yeah, I'm paraphrasing, and for some reason when I do JFK it sounds like Donald Trump. You know what, finance is good, it's not bad, could be better. The broking industry's broken, it's broken, but we're going to fix it, we're going to make broking great again. What do you think, ladies and gentlemen? That's right. Easy converts, that's how I became president. Anyway, ladies and gentlemen, the people who are going to make it great again are here with us in this room, and two of them have come all the way. You guys are from where? From Sydney? All Sydney people? Yes, has anybody come anywhere further? Newcastle? Wollongong? Noosa, thank you very much, madam, all the way at the back. Yes, good on you. We have people who've come here all the way from Western Australia. Our first two speakers, and they're outside getting ready to come on stage, ladies and gentlemen. We give them a traditional welcome that we do for people from Western Australia. Welcome to the future. So, ladies and gentlemen, our first speaker is an experienced expert in this industry. He's had 14 years in the financial industry, started at CBA and worked his way up to regional support leader and area manager, Western Australia for Suncorp. He's worked in direct channel, the third party channel. He's a specialist in social media and helps others to create powerful and precise personal brands like mine, Sam McCool, MC Cool, yes? He's helped me and he's going to help you guys as well. He's one of the leading BDMs in Australia, and in fact, the guy never sleeps. He works all hours. I've got emails from him at 4 in the morning, 3 in the morning. I think he doesn't sleep at all. Maybe he has a siesta at 3 p.m, I'm not sure. But the guy is a workaholic, and he has a deep deep passion for this industry, which is why a couple of years ago, 2015, he set up the National Finance Brokers Day. Ladies and gentlemen, without further ado, I would like to welcome to the stage the founder of the National Finance Brokers Day, Mr. Dino Pacella.
Thank you, Sam. I don't know how to follow that, but we're going to give it a try. Guys, I'm just going to take a couple of quick minutes. But before I actually get into that, I do want to wish everybody a very happy National Finance Brokers Day today, and for your attendance today, and for those watching at home across the Facebook page. So thank you and welcome. But why National Finance Brokers Day, and how did this day come to fruition? So when I first joined the third-party channel approximately 5 years ago, I was overly surprised around the large number of people that still weren't aware around the full service propositions that brokers bring to the Australian market. And I wanted to do something about it. So as well as having a day, it's a continued lead up throughout the year to really highlight the advantages, as well as the full service proposition that these finance professionals bring throughout the Australian consumer market. I'm a strong believer that I feel that every consumer has the right, let alone the opportunity, to seek strong professional advice when it comes to seeking out a loan requirement, because regardless of that requirement, it is a very serious transaction when taking out a line of credit, and having a professional in your corner certainly goes a long way to making sure that you've got the right structure and right product in place. Definitely feel with NFBD in its third year, I definitely feel that this year is an important one, given we are seeing the financial service industry being undertaken through a Royal Commission. But I feel that it also goes to further highlight the professionalism, the integrity, and the real advantages that brokers can bring to consumers. So this is a great opportunity for the industry and for consumers to take advantage of that as well. Before I pass back to Sam, I did want to personally thank our sponsors for making today possible, as well as for bringing the live streaming to us. So Clear Credit Solutions, EasyDocs, Astute Connection, the Mortgage and Finance Association of Australia, Inform Loans, Mortgage Boss, and Lodex and Block Loan. Can I please get a round of applause for our sponsors today? And I'd like to thank in advance our three keynote speakers that are coming on board in a couple of minutes. So we have Director and Finance Broker Janine Leafe, we have Chief Operating Officer from Hasching, Siobhan Hayden, and of course Mark Burris, Executive Chairman of Yellow Brick Road. But before I hand back to Sam, because I won't get a chance later, Sam, thank you very much. Come on with me. Come on, mate. Can I thank you for emceeing and giving up your afternoon to ensure that our event goes as smoothly as possible. So thank you.
Oh, no worries. Thank you. I thought you were going to give me an award there for a second, Dino. I was waiting for the award, but anyway. Ladies and gentlemen, please thank Dino Pacella for setting up this whole day, this whole afternoon. He did talk about the elephant in the room there, not just in this room, but in many rooms of Royal Commission. And I know they're talking about killing off some of your trailing commissions. And I do find it a little bit ironic that it takes one commission to kill off other commissions. But anyway, also we had EasyDocs, one of the sponsors, and I understand they're revolutionising the industry by making it easier to aggregate some of the documents that need to be provided. So it's easier for brokers and easier for consumers, which is great. I'm a little bit concerned that my broker now knows about my gambling habits, seems to think that I'm a bit of a chronic gambler, but I explained to him I'm not a gambler, I'm actually just a brand ambassador for Star Casino. Anyway, he hasn't bought that yet. So ladies and gentlemen, without further ado, we have our next speaker. She's come all the way from Western Australia, and if you've seen her on LinkedIn, is part of the LinkedIn Success Stories with Dino. They do some fantastic vlogging, and that vlogging has led her to be one of the most followed brokers in the country. She has over 25,000 LinkedIn connections within 1 year, just from her video blogging, and also she's a passion for educating people on financial literacy. She won the MFAA WA Young Professional of the Year award for this year, and is an absolutely outstanding mortgage broker professional, and has become the director of her own brokerage, Informed Loans. So ladies and gentlemen, to tell us 3 ways to find a better broker, please welcome to stage Janine Leafe.
Thank you, Sam, and it's great to see some familiar faces here today, and those that I haven't spoke to individually yet, please come and make yourself known to me so I can have a chat with you afterwards. It'd be fantastic. So, hopefully it's worked for me. So we're going to talk about how to source a competent mortgage broker or finance broker, so those commercial, commercial broking, and car finance, residential loans, the whole lot. So those of you that don't know me personally, I actually have a penchant for statistics. I do love statistics. So at the moment, the mortgage brokers alone are writing 50%, 55% of home loans nationally, and we also have over 17,000 brokers nationally as well. So the reasons why it's important now to choose the right broker for yourself is because it's a lifelong journey with that broker, and when you pick the right broker, it's the difference between good financial success and bad financial success. So the 3 signs that your broker is the one for you, I want to talk about credentials, credibility, and emotional intelligence. So initially, the standards for education were a lot lower back in the day. Since we've been put under the pump and we're under a lot of scrutiny with what's happening along in our industry, we now need to have at least a minimum of diploma. So when you're seeking a broker, you want to make sure that they have at least a diploma. We have a lot of brokers out there that have got great credentials, degrees, and also Cert 4s, and then a lot of years of experience in the industry. So education standards are going to be lifted moving forward. So if you haven't already got your staff underneath you with a diploma, make sure that you're giving them that right education so that they can give the best to their clientele. So the lenders that you're accredited with is also important to your consumer, because the consumer needs as much choice as possible, because they all have unique financial circumstances. And if you don't have a large range of lenders that you can work with, you might miss an opportunity where they can actually get finance. So that's very crucial. When you're looking for a great broker or great car finance, look for the reviews, look at testimonials. Also look at articles written within the industry. So if you're picking a mortgage broker, you want a mortgage broker that's writing for MPA, MFAA, the governing bodies, so that way you can they can justify who they are in the industry. And if people are listening to what they have to say, then they could be a great broker for yourself. And education is vital, coupled with experience. So a mortgage broker does require 2 years mentorship. That's being worked on as well with what's been going on with the Royal Commission. So now the mentoring means a lot more than it used to, because people were going through underneath the radar, and now they're getting good quality education, which is important for the consumer, and it is also important for a mortgage broker to be a good broker. Credibility. So do your due diligence. If you're going to work with somebody in business, you need to check them out. In the era of the internet, you can find so much information. So I highly recommend that you check their online presence. Go and have a look on Google. So Google this person that you're going to work with. Go onto the images, the news, articles, videos, and if this person is in reputable magazines or they're spoken of, and you've got good testimonials, you're definitely on the right path. Just because somebody is well known in the industry doesn't mean that they're going to be the right broker for yourself also. So what you're going to want to do is, when you meet with them face to face, it's a personality thing. Not everybody's going to like me, and they may not like yourself too. So just because you're a good broker on paper doesn't mean that you're going to be personality-wise you're going to relate to that person. So check out LinkedIn, Instagram, Facebook, Twitter. They should all paint a picture of that person and be consistent. If there's inconsistencies within what you're seeing on their social profile, then that may be a red flag for how they operate in the industry. And lack of content is not a good sign. Doesn't mean that a broker is not a good broker because they don't have good content, but if there's no content, that might mean that they're new to the industry, they don't yet have years of experience, so they may not be as good as somebody else that does. Emotional intelligence. So it's very important that we are listening to our consumer. Put the paperwork aside. Anybody can do a loan application. We really want to get to know our clientele and what stage of life they're in. So always listen first. Make sure that you understand your consumer. Beware of the rate chaser. The cheapest interest rate is not always the best for your clientele, and more than likely it isn't as well. So people need to understand, just because there's a rate out there for 3.59, that is all dependent on the individual needs. So if somebody's putting themselves out there just as a rate chaser, they're not going to be the best broker for you. You've got to make sure that they're taking into consideration all factors. So somebody, for example, a client that comes to you, young couple, just got married, one of them, and they've got a dual income, somebody's going to have a baby maybe, a child's going to come along the way. Is it really viable to push them to max borrowing capacity when they're going to lose an income? So by going with a rate chaser, they might just be get you in, get you out, get you a home loan, but are they really thinking about your needs moving forward? A reputable broker is also your debt advice specialist. So if they're not asking the right questions in terms of how are you going to get out of this home loan, then they're not the right broker for you. I haven't written a 30-year home loan in a long while, and that's because I want to see my clientele get out of the debt as quickly as possible as well, and prepare them for a healthy retirement, prepare them for life stages as well. So it's best that we look at all facets of their financial position. Cross referrals as well. As a consumer, don't be scared if somebody's selling you another product. That actually means that they're a good broker, because they should be looking at superannuation opportunities. They should be looking at insurance opportunities. If they're just selling you a home loan and they're not telling you that you should get home insurance, if they're not looking at your superannuation when you've got 5 superannuation funds and saying that maybe you should speak to a financial planner to get them rolled into one if that's maybe suitable for you, I don't think that that's a good broker either. So make sure that they're looking at your finances holistically. And brokers also, we know you better than you know yourself. By looking at your finances and with years of experience, we can tell when there's flaws within your position, your financial position, and we should be able to teach you how to be in the best position for yourself moving forward. So if they're not talking to you and openly about the weaknesses within your finances, then they're not, again, looking after your needs. So a broker is for life and will assist you through your life stages. When you pick a broker, pick someone that you want to work with for the rest of your life, because you should be seeing them regularly. And if you're not seeing them regularly, then they might be missing pit holes within your financial situation, because things change. Divorce happens, marriages happen, children come along, and make sure you pick the right one for you. Thanks very much.
Legend. Thank you very much, Janine. Wonderful, wonderful presentation. Always over-delivering, not just one way to find a great broker, but 3 different ways, which is always exceptional. It's great to see her in person as well. Who's actually seen Janine on her LinkedIn vlogs? Some of you, yes? Excellent. So what a fantastic presenter. Ladies and gentlemen, we're just ramping up another gear here. We have Hasching. Now, how many of you are actually familiar with Hasching? Know a little bit about it? Okay. A lot of people at home may not know about it. It's Australia's first online marketplace to access home loans without having to shop around. It puts consumers in direct connection with verifiable mortgage brokers who not only compare but negotiate better rates. It's disrupting the industry. It's one of Australia's fastest growing fintech startups. Since launching in 2015, they've had over 700 broker partners and processed over $164 billion worth of home loan applications. So it's pretty impressive. They were a finalist in the Optus My Business Awards for 3 years running, a finalist in Fintech Business Awards this year and last year in the categories of Leading Innovator of the Year and also Entrepreneur of the Year. They've been featured in the top 10 of Ant Hill Magazine's Smart 100. Ladies and gentlemen, they're really doing amazing things in this industry, and we have today a lady who is absolutely impressive. She is the COO and board advisor of Hasching, former CEO of MFAA, and without further ado, ladies and gentlemen, I'm going to bring her to the stage to explain to you a little bit about what's happening with Hasching. Please welcome to the stage Siobhan Hayden. Thank you.
Thank you. I'm actually not going to talk overly about Hasching. I'm going to talk you through the customer experience in business today and the importance of delivering a frictionless experience. So in the last 10 years, there's been a discernible growth in a new category at the C-suite level in business called the Chief Customer Officer or Chief Experience Officer or Director of Customer Experience. And you probably heard those terms. Those executives have a full remit in businesses to deliver and design new processes to ensure that we have great customer outcomes. That's twofold things to consider, is that at the top of businesses today, the customer's voice is being listened to and delivered on and heard. And more importantly, those resources are not in place to fix problems, they're there to accelerate growth. And just keep that in mind as we talk through today, the customer of today. So data rich, time poor. Is anyone that doesn't relate to that comment? So research in the last 7 years, 18-hole memberships in golf are on the decline. So 9 holes is more prevalent for customers to play. 2020 cricket has replaced the 5-day test cricket because we don't have 5 days to sit at a test game. And in America, yet to come to Australia, is an express Monopoly version because our 8-year-olds and 10-year-olds are too busy to play Monopoly. So that's the state of affairs in life. We're all very, very time poor and we've got too much data in front of us. So I think we can all relate to that. 60% of your customers are already well through the buying journey when they reach out to you. And where are they getting that information from? The internet. So they're doing all their own reviews and they're also talking, this one's an interesting one, they can actually pick an alternative product. If you run a bricks and mortar environment, they could be in the queue waiting to be serviced and buy from one of your competitors. Interesting. And most importantly down the bottom here, particularly in our sector off the back end of the Productivity Commission and the Royal Commission, the power of the crowd has never been more important. The impost of a brand or a big bank, that branding doesn't matter. The crowd's opinion matters more than anything, and that's been evidenced in research. So that's today's customer. Anyone believe that that's not today's customer? Reflective of what you see every day? Okay. Let's have a look at tomorrow's broker. Advice is your key currency. I personally value a mortgage broker's hourly rate at around $3.50 an hour, if not more. And I've always been an advocate, if you've heard me speak previously, about why brokers at that hourly rate persist on doing tasks that are probably valued at $25 an hour. Data entering, collecting paperwork, etc., etc. So advice is your key currency, and this will become more powerful when we watch a short video. Converting customers to raving fans. I often refer to brokers that are big advocates of Hasching as being Hasching apostles. And you want in your business, with your brand, to create, ideally, customers that will rave about you. They will make sure that you're known by the crowd. It reduces your need to go out and continually market your own business if your own customers are doing that for you. Again, all this makes sense. Delivering a frictionless experience is the key challenge. Particularly, I would suggest that brokers today on a normal file, if that we can even call a normal file anymore, no one's vanilla or normal, but about 14 to 16 hours of effort would be not unreasonable. Maybe add an extra couple of hours with all the different deliberations with lenders today in the last 6 months. Who's familiar with that icon? Yell it out if you know what it is. Siri, very good. What's the next one? Alexa. That's Alexa. So they're both augmented reality. You can talk to these interfaces, you can ask them questions. Who's got one of these or has used one of these in the room? Yep, they're fun. And you've got IBM Watson, which is a chatbot. The most commonly asked question of IBM Watson is, will you marry me? Now, I'm sure we'll get past that initial kind of fun interaction with a chatbot. What I want to show you now is KPMG's view of banking in 2030, which is called EVA. Who's seen the video on EVA? Okay, a few people, so I'm not going to bore you for 1.57 minutes. Oh.
John. Hey, John. Wake up.
Hey, Eva.
Good morning. Sleep well?
Not bad, thanks. Could do with another hour.
So I'm going out with Grant tonight. Dinner and drinks. Could be a late one.
Don't forget, the last train is at 10:45. You've been spending a lot on taxes lately.
Message received.
John, it's your dad's birthday next week. Would you like me to pick a few gift ideas to choose from?
Yeah, thanks. Something nice. Leather-bound. You know the sort of thing he likes. I was thinking about 150, 200.
Perfect.
I see Copper took a bit of a battering overnight.
Yes. Oil rose 0.5%, so I rebalanced your portfolio. I'll reassess when the market's open.
Maybe keep an eye on gold too.
I'm on it.
Oh, Eva, I got a message from Kate in HR. Something to do with pensions?
Already taken care of, John. I've increased your monthly contributions by 3% and transferred £10,000 from your ISA.
Great, thanks. Is there any way I can make more of my investments?
My projections suggest you could improve your...
Sorry, Eva, gotta run. I'll catch up with you on the train.
Okay, John. Transferring now.
And what a fun example that was. You know, when you're putting videos embedded into PowerPoints, it's always going to go wrong. But anyway, I persisted. So that's the experience it's talking about. That's the view of banking in 2030. The key part of that experience, whether it be 2030 or 2025 or 2035, is the advice piece. That's the central piece to that whole experience. Customers don't want to do anything else, but they do need advice. And as I've said before, the main mantle that brokers have is the advice model. The ability to eyeball someone, give them what they need to know. But the conversation now, I'll admit to you all, I recently turned 45. So now, as a borrower, as every broker in this room would know, I need an exit strategy. Fun and games. So as I shared earlier this morning, what I would love for my broker when I'm meeting with that person is not just to talk about my home and dance with me about my exit strategy, but also talk to me about, are you prepared for your retirement? Gosh forbid. How are you going with your superannuation, and do you have a will in place? These are discussions on the advice piece that I would highly value. When I've got their confidence, or when they have my confidence, I then want to make it happen. So I want all the documents to happen. I want it all to be scraped and moved through. That's the point I was trying to get to. This is the Hasching online solution. We're very far away from a Siri or an Alexa, but we do very much value the role of advice delivered by brokers. We have on the borrower's side a dashboard for customers where they can instantly message their broker, they can upload their documents, they can scrape their bank statements using Proviso, and also with the power of EasyDocs, they can upload all their other supporting documents in support of their file. And they can also download that and their statuses of their loan via their phone. Their broker has access to all their leads at any point in time, all the deals that we have available, and they can add remarks and, again, activate document upload for their customer. This is trying to save time for broker partners and collaborate with your customers. Any tool, and EasyDocs is one of those, where you can collaborate with customers, allows your customer to feel more involved. It's like the Uber driver coming to your driveway, or the Domino's pizza delivery person coming up to your front step, who's used that app. So we love that sort of thing. So as a broker in the room, if you can do anything that outsources a task, but in a collaborative and enjoyable manner, it's a tick. Add it to your business, get it done, save yourself 3 hours. Because as soon as it costs less money to acquire a customer at the retail level, they'll start to give you less commission. So you need to prepare your businesses today to not be spending 16 hours per file. Okay, so I sort of feel like I've landed on a finish point, which is a little bit negative. But I just wanted to talk you through some of the high points in relation to customer experience, the absolute unrelenting focus that we should all have in our business, and I think as brokers we do, and it's a great day today to celebrate that. But to keep in mind, if that's the end game, if it's a completely online discussion, how do you continue to be relevant in that space? And it's about the advice piece. Thank you for having me.
Thank you, Siobhan. Excellent. What a wonderful presentation. It's good to know tomorrow's broker doesn't work as well as today's broker. You guys have an advantage there. Don't feel bad. I ordered delivery last night. The food still hasn't arrived, so things don't always work the way they plan. Ladies and gentlemen, we have an absolute treat for you. Are you ready for it? Yes, this man is a TV star. He's starred of his own show, The Mentor. You've seen him on that. He's executive chairman of Yellow Brick Road and also non-executive director of the Sydney Roosters Football Club. Hey, you can't win everything, right? Ladies and gentlemen, here he is to speak to you today about the prosperity in property, Mr. Mark Burris. Thank you.
Well, the good news is I've changed the topic, okay? So I'm going to talk about something a bit more relevant to our industry. So, g'day guys, how you going? I want to talk about as mortgage brokers, which is what we all are, and not everybody in this room, but I guess most of you have an interest in it in some respects, particularly me. I want to talk about what the hell's going on, and I also want to try and understand, maybe some of you can help me out here, why we as an industry, I'm talking about the individuals as opposed to the various forums there are, like the Combined Industry Forum and MFAA, etc. I want to know why we as individuals and or groups of businesses are not doing anything about the newspaper reporting that I've been reading. So let me just take you through where I think everything's at. And I think, I'm hoping that I'll get the point home to you that this is really important and it's about time we reacted. And there is something that is happening which I'm involved in, which I'll be happy for you guys to join with us. So the first thing is, I guess the first thing is the, let's talk about the Productivity Commission. So anyone here sort of got a bit of sense of what the Productivity Commission did 2 weeks ago? Yeah. Okay. The Productivity Commission has been investigating the banking industry for a long time, and our industry as well, and just trying to work out how it all hangs together. And of course, the good thing about the Productivity Commission is that they said one good thing, which is what everybody's saying, this is the universal principle. The universal principle is, and the Productivity Commission conveyed it again last week or 2 weeks ago, that the mortgage brokers are an important segment or sector in the banking marketplace, to the extent that people get home loans or investment loans for property I'm talking about now. So that is an endorsement of what we do. So there is absolutely no dispute as to the value of mortgage brokers in this country. And by the way, there's no dispute as to the value of mortgage brokers in other regions around the world. So there's no one around the world who is saying mortgage brokers shouldn't be there, and or they don't offer good value to their clients, their customers, and or they don't actually provide a logical step in the process of getting a loan. So tick, everybody has got a good role to play. You might think to yourself, well, okay, this is a good industry to be in. But the issue is the concept of conflict, how we are seen as being conflicted. In other words, who pays us relative to who gets the service. So to some extent, we are not seen as being independent, although I dispute that position. And by the way, we can be getting paid by somebody else and doing a service for a customer. I mean, there's nothing better than if I'm a plumber and I do a service for you and someone else pays for that service. If you're a consumer, that's a great outcome for the consumer. I guess the backwash is that people allege that what we get paid by the banks, the customer is paying for it, and they're paying for it in the interest rate. That may well be true, but that doesn't actually, you can't see where, and it is not the case, but you can't see where a mortgage broker's commission is actually added into the price of a loan to a consumer. It's not there as such. So we have to deal with this. We as an industry have to deal with this. Because if we don't, you've got a Royal Commissioner at the moment who's probably going to make some sort of major statement in relation to reforming our industry. And one of the things that is an obvious one is looking at other models around the world where brokers do exist and adopting the remuneration system of those other models. And the model that the Productivity Commission is looking at, or did look at, is the UK system. And the UK system makes all the payments in one payment, and it's all up front. Now, that would be great. We'd be very happy for someone to look at our upfront commission and our trail, turn that into a net present value of one amount, and pay it all to us up front. Now, you'd be very happy to get all the money up front as an industry. You would, but the consequence of that is churn. So you're going to be encouraged to change your behaviour towards your client because you want to get the whole up front, or not you, but other people in this industry may want to be, they will be encouraged to churn the customer every year. So if you're getting paid once for settling the loan and you're getting paid once in one payment, and 12 months later you'll churn the loan, or you'll be encouraged to churn the loan, or your behaviour will be encouraged to churn the loan. So we have to do whatever we can. That's one outcome, by the way. But what the banks might do, the banks might say, yeah, we'll pay you up front, but we're not going to pay you the net present value of the upfront payment and the trail. We're going to pay you some other number, which is less than both those numbers added together and discounted over time to one payment today. So for me, I think the best payment structure or remuneration structure is the structure that exists today. A payment up front and a trail. So that takes us to what do we do for the trail? And I think, you know, it's about time we grew up as an industry and said, yes, we will do something for the trail in a formal sense. As opposed to all of you, I no doubt talk to your clients all the time, and you would say, yes, I'm entitled to the trail because I actually do something for my clients. I talk to my clients, I'm trying to get them this, that, and the other. But I don't know what you do in a formal sense and what your client would think you're doing in a formal sense, and whether or not your client thinks it's valuable in a formal sense. What we don't want to happen is for us to sort of have an opt-in, opt-out type situation like the financial planning industry. But I do think we should be agreeable to doing something for the trail that we receive during the life of the loan, or the remainder of the life of the loan. So given that there is this Productivity Commission push for a once-only payment, what effect do I think this is going to have on, as a consequence upon our industry? I don't think it's going to have any effect. I don't think what the Productivity Commission, I hope they're not being here, and this is probably being broadcast somewhere, but I don't think the Productivity Commission's recommendation as to how our remuneration structure should be looked at will have any effect on what this current government would do. I think what this current government, because I saw the Treasury submission, not the Treasurer, but the Department of Treasury's submission to the Hayden Royal Commission, that actually talked about whether or not we should receive one payment and/or should we just stay on the current remuneration structure. And in their view, after they considered a once-only payment, they took the view that the better remuneration structure is an upfront payment with a trail. So that's what Treasury says, and I guess it's fair to expect what Treasury says is what the Treasurer wants to do. And whilst ever they are in government, my gut feeling is that the legislative response, if there is any legislative response, to how we get paid as brokers would be nil from this current government. Now, I don't know if that would be the same, would apply if it was Labor Party, because I don't know their view. But I have had some discussions with government, our current elected officials, and they take the view that they are supportive of our upfront payment and our trail, but we've got to do something for it. So I'm not too worried about the Productivity Commission recommendation. That's the point I'm trying to make. But outside of that, the problem we do have is the Productivity Commission's recommendations have also been forwarded to Hayden as the Royal Commissioner for the Royal Commission. Now, Royal Commissions have a much different effect on governments. The reason it's a Royal Commission is so the government can't get involved. So in the Royal Commission, Treasury, the Department of Treasury can make submissions, anyone can make submissions, but the Treasurer himself can't make submissions. That's why you have a Royal Commission, so elected officials can't get involved. So it doesn't really matter which way our Treasurer believes the policy should go in relation to us as an industry, as a key part of protecting consumers and giving consumers the best outcomes, and as a key part to intervening or intermediating between banks, who are on the bit on the nose at the moment, and borrowers. It doesn't really matter what the Treasurer thinks. What will matter is what the Royal Commission thinks. Now, my view on this is that the Royal Commission is not just going to say, and a lot of people disagree with him, but it's not just going to say, oh, well, you know, here it is, and slap on the wrist for the banks. They're going to have to do something big. They're going to have to do something important. You know, like Royal Commissions always come up with something important. And what we don't want is to be the one who wears it. I mean, I can't imagine them sort of saying something like, well, from now on, banking licenses are going to be, conditioned up. I mean, they're not going to do that. They're not going to interfere in the stability of the banking system. There's just no way. That's too sensitive. It has economic effects. It can create all major problems. They might sort of say something like, directors' remuneration, etc., shouldn't be geared towards volume and all those sorts of things at a bank level, but that law already exists. This current government's already enacted that legislation. So a lot of the legislation that this Hayden Commission could make recommendations about in relation to banks really already exists, which is the reason why this government was resisting a Royal Commission. And don't forget, we've had a lot of, there's been a lot of examination of the banks, and us for that matter, through all the various regulatory bodies that the government stands by. So, ASIC got $140 million two or 3 years ago to investigate further into our industry. ASIC's has been given a whole lot more money as well. APRA has expanded ridiculously large, and APRA, has been doing a lot of work, you would all know, since 2015. I mean, the credit approval process, I feel sorry for the people who have had bad experience with the banks, but a lot of these things where banks are lending money to people who they shouldn't lend money to, there's no way, we know this, there is no way in the world that's happened recently. Because as well as I do, it's like so difficult to get a loan approved today, relative to say what it was like 3 years ago, let alone 2 years ago. It's so difficult to loan approve. There's just no way people are lending money, anybody's lending money, banks aren't lending money, nor are we encouraging banks to lend money to people in an irresponsible way. So a lot of these case studies that have been looked at go back a long way. So I just can't see the Royal Commission coming in and sort of saying, well, I want you to change lending standards. And they're not going to interfere in lending standards. That's an APRA thing. So what I am worried about is that there is somewhere where they can make an impact, and they can make an impact in relation to our role. And it looks to me during the Royal Commission, a lot of the commentary that I've been reading about in the newspapers and on television and on radio, etc., is that there's been a slow push and a slow shift of responsibility towards us, as if we're doing the wrong thing. Now, for sure, there are rogue brokers out there. For sure, there are people out there who do irregular things. For sure. But that exists in every business, every industry. There are mechanics who do the wrong thing by their clients. There's lawyers who do the wrong things by their clients. There's accountants there's government officials who do the wrong things by the people who elect them. That's normal process. But over time, we are, to some extent, and you might think this is not the case, but it certainly is the case from the surveys that I'm getting, we are seen as being somewhat of a villain in all this, and taking all this money up front, like we're making a fortune up front, which is just wrong. I mean, the average broker in this country, net of costs, makes about 88 grand a year. There's 17,000 brokers in this country. That's the average take-home commissions per annum that a broker makes, $88,000. And that's being confirmed by the COF, has been confirmed by Deloitte, the Deloitte report, and also been confirmed by MFAA. So it's not as if we're all making a fortune. And like my business, we make $220 million a year in revenue, but we pay shitloads of it away, like 195 million we pay away. So it's not like everybody's sort of, and we're one of the biggest, so it's not like we're all sitting on a fortune, but that's how we are being conveyed. So we're up against it. So we need to run campaigns ourselves. So what have I done about this? You may have heard of this group. I've, along with a few other guys, formed a group called the Mortgage Industry Forum, MIF. And I mean, there's lots of forums around. And we formed this for a particular reason. The Mortgage Industry Forum was formed by brokers, not by the MFAA or FBAA, who are great, or the Combined Industry Forum, which by the way have banks on there, or ASIC. This is by brokers for brokers. And the objective is to assess all the recommendations that have been made about us as an industry. So we've paid for it, I paid for it, I've got a small secretariat of individuals. We meet once a week, once a fortnight, and we have been culling through every recommendation that's been made by the Combined Industry Forum, every recommendation that's been made by Sedgwick, every recommendation that's been made by Productivity Commission, the CIF, ASIC, and anyone else that matters. And we've actually built a report, and we have sent that report to the Secretary of the Treasury. We've sent it to the Treasurer. We forwarded it on to the Hayden Royal Commission, and we're about to start pushing it into our mortgage industry, magazines, just do industry run. And this is the first time I've spoke about it. I haven't spoken about it ever. Now, just to be clear, this is not against the Combined Industry Forum. In fact, we're trying to be adjunctive to them. We are trying to, we support everything they've said. We are not against ASIC. We are not against MFAA, and we are not a breakaway group from the NFBD. We are not trying to build our own association. All we're trying to do is properly build a case for brokers so that we can give handover, we as a segment of the market, sector of the market, can hand over to the government and to Commissioner Hayden a reasonable, well thought through document and to show that it's been well supported as well, a document about how we should be regulated and or managed around fee structures, around our obligations, around transparency, around training and compliance for the future. Now, there's no point in us pushing up against it. We will not be able to resist the sorts of recommendations that both ASIC and the Combined Industry Forum have made. Now, do most of you know what the recommendations are? There's 6 recommendations. Does everybody pretty much know what the recommendations are? Okay. Well, I haven't got my glasses on, but this is going to be interesting. Well, let me just turn to, there's 6, they're quite simple. And what's, I guess why you come to these events is to find out these things. Let me just go to the back of my document. Yes, I'm on television. You think I know a bit more about this stuff, but I don't. No. It's towards the back of that document. Okay. So, proposal 1 is that commissions should be standardised. Now, I'm not talking about changing the structure of commissions, but commissions should be standardised. So if Bank A is paying this commission, Bank B has to pay the same commission on the same product. So, and the Combined Industry Forum and ASIC and Sedgwick all have responses to that, and we, the Mortgage Broker Forum, Mortgage Industry Forum, our forum, we're saying we support that. Recommendation 2 is volume-based bonus payments. In other words, volume incentives or volume VBIs have got to go. Now, bottom line is they're gone anyway. They just don't exist. They've been gone for a couple of years now. But we are saying in a formal sense that it encourages wrong behaviour. So volume-based incentive payments and or bonus payments should be gone. Now, that's a recommendation of the Combined Industry Forum. It's a recommendation of ASIC. It's a recommendation of the Sedgwick report as well. The third one, soft dollar benefits, gone. Now, they've gone anyway. They have gone anyway. You probably noticed that the aggregators you might aggregate under or sit under, they don't do anything in relation to soft dollar payments anymore. No one's getting any soft dollar payments whatsoever, nor should they, because they encourage, again, the wrong sort of behaviour. Recommendation 3, there's 6 of them. We actually have 7, but there's 6. Recommendation for ownership. If an aggregator or a broker is owned by a bank and or a bank has the ability to influence the outcomes on that entity, like through a board membership or something along those lines, then the bank must fully disclose. We accept that. I think that's a fair thing to say. So that would mean that Aussie Home Loans When they do an ad on TV, CVA's got to say that they own it. Not sort of down the bottom where you can't see it, but in a fashion that is actually clear that it is owned by a bank. Same as the Yellow Brick Road, used to be part owned by Macquarie. It's not anymore, but Macquarie, if they still own it, would have had to disclose that position. And if Macquarie had a board seat, they don't, but if they didn't, and they don't, if they did, they would have to disclose that position, because it looks as though, by the way, it doesn't happen, but it looks as though they are influencing the outcomes of the people in Yellow Brick Road, which, by the way, is not the case. Sometimes I wish I could have influenced them to approve loans, but they didn't. And for those of you who deal with Macquarie, you know they're not someone you're likely to change their mind. ASIC proposal number 5. Transparency. Now, transparency, it's an obvious one. Everything we do must be totally transparent. Everything we do. And we must disclose everything every relationship, every fee we receive to the customer. Again, we agree with that. Proposal number 6, enhancing a customer culture. Now I explain what that means. So we have said there needs to be a process of keeping file notes and information and data about the relationship you have with your customer. One of the things we're proposing actually is that an app be produced and or developed by somebody, and I know there are people in the room who do these sorts of things, but an app be developed which is a voice activated app where when any one of us go to see a client, that we record everything on our phone into the app, and that information gets stored in the cloud. It's available for ASIC to go and have a look at, it's available for the bank to go and have a look at, and it's available for the customer to go and look at, and of course it's available for us to look at. And it's available for anybody who runs your compliance regime, whether it's you doing it yourself or whether it's the aggregator coming and doing it for you, or if you're in a franchise system, whether it's the franchisor coming and doing it for you. So this process of keeping proper records, not just handwritten records, but actual records of the things that you say to your customer that are relevant to your customer, to show your customer is getting what is in the customer's, I won't say best interest because that could come in, but what is not inappropriate for your customer. Don't expect that not inappropriate test to stay where it is. I think you're going to get a best interest test for sure. So that's going to make it even put a greater burden on you to be prepared to accept that you need, from a compliance point of view, and I never thought I'd be up here standing talking to people about compliance, but a compliance point of view, you need to keep really good records. And you need to make sure that those records reflect a really good customer experience. A really good customer experience is not that you go down the pub and have a beer with them and put your arm around them and say, how you going, and all that sort of stuff. A really good customer experience for the customer means the customer has been taken through the journey and has been done in a complete, honest and transparent way with full facts, full disclosure, and accurate facts and accurate disclosure. Now, everyone will say, oh, yeah, well, I always do that. Yeah, but you need to be able to prove it. And the customer needs, the experience of the customer doesn't end when you say, look, I'm going to submit your application, or by the way, it's been approved. The customer's experience extends beyond that. The customer might want to go back and look at something that you said. Now, if you said something to the customer that they want to dispute, and if that is kept as a verbal record, as opposed to just a written record, because a written record's your record. A verbal record is your voice being recorded on an app. It's going to be really hard to dispute that's not your voice. It's going to be really hard for the customer to say, you did not say that. And it's going to be really hard for the compliance person who's looking and saying, you did not say that. You could write something, they're going to say, well, when did you write that? Now, how do I know that's a proper record of what was said, what you wrote? So it makes it sort of unable to be disputed. And I think that's the 6th recommendation. I think that's really important, that one. And we need to show the government that we're doing something brand new, as opposed to we're just going to do the same stuff that we've always done. They're the 6 recommendations. The Mortgage Broker Forum is supporting those recommendations. They're the recommendations that have been submitted to Hayne. Those recommendations have been submitted to the Treasurer. ASIC supports them. Cedric supports them. The Combined Industry Forum, which has banks on there, they also support it. Notwithstanding that we hear murmurs about some of the banks wanting to get rid of brokers altogether. The Combined Industry Forum supports those 6 recommendations. In fact, they are their 6 recommendations. I'm saying to you, we need to support them. It's not enough for an aggregator or a forum to go and say, oh yeah, well, we support them. They don't speak for us. We've got to speak for ourselves. So in that regard, we have set up a Facebook page, which you can, it's called the Mortgage Industry, the Facebook page is the Mortgage Industry Forum. There's 6 questions on, and the 6 questions are the 6 recommendations. They say, do you agree or you don't agree? And you go, yes or no. And you register your details on there. We need to be able to take to the government a document that says, of the 17,000 brokers in this country, we have 5,000 brokers who support all the recommendations, because there is no way on this earth that any government is going to support any of these recommendations if they don't think we, the brokers, are aware of it, we've thought it through, we've debated it, and we agree with it. In other words, we're going to comply. Otherwise, all we've got is people speaking for us on our behalf. And that doesn't work. And I'm not prepared to speak on anyone's behalf either. That's why I'm here today, and I took this opportunity when Dino presented to me. I thought, yeah, I'll get up and say to these guys and girls, you need to do something about supporting the recommendations yourself. And now, as I said, there's a forum which you now can join, and or you can get onto the Facebook page and support. And I'm asking you, would you do that? You need to do it. If you don't do it, and something happens that doesn't go in your favour, then you've got yourself to blame. And your clients, the whole industry will break down. Something radical could happen. I've seen it happen in the past. And we're the easy one to get. We're not banks. We're fragmented. Banks are all teamed up together. They've got big balance sheets. They've got massive lobby groups. They're politically connected. They are the biggest taxpayers in the country, so no one's going to hurt them. They're the biggest taxpayers in the country by far. And everyone's aware of it. They're aware of it. I'm not bagging them, but they are what they are. They're behemoths, massive organisations who've got a lot of shareholders to protect. So they have full machinery behind this. What do we got? We've got a forum today. I haven't heard anybody talking, I haven't heard any brokers talking about this. I've heard a few aggregators talk about it. I've seen a couple of guys out of Connective talk about it. I've seen some of the guys from AFG talk about it. The VAL guys talk about it. But like, what are we doing about it? Because if you don't do something about it, I'm going to tell you now, I reckon the chances are right now, 50-50 chance for the structure of our remuneration to be changed against us. But if we all team up together and move forward, there's more of us than them. It's about time brokers did something about it. I mean, you're good enough to turn up today and to Dino's event, but you know, there's 100 people here, 150 people. There's 17,000 of us out there. It's a massive industry. And as I put it to the Treasurer, there's 17,000 people. If you change the remuneration structure of that 17,000 people, I reckon that the industry will collapse. You know, like if they're only earning $88,000 on average, if you took away 20% of that, people can't survive. And if you know, it's not hard to take 20% out of the trail. So if you take 20% of the way, if you don't have our industry survive, then guess what happens? The banks get stronger because there's no intermediary anymore. So that's my position. That's what I wanted to take the opportunity to talk to you about today. I want you to go to that Facebook page if you get a chance, answer the questions. If you don't have, you know, if you're not on Facebook, maybe you can go through Dino, run a movement through here, but somehow get your voice heard. That's it. I'm going to get a glass of water. Thanks.
Ladies and gentlemen, please thank Mark again. Thank you very much. We're going to do a couple of quick questions. So does anybody in the room have a couple of one quick question for Mark So somebody? Yes.
Hi.
Voice.
Here, come on over.
Hi, I'm Dilek. The transparency, is that going to apply to the online comparison sites as well? Because some of them are owned by banks as well.
It's a good question. What I went through there is meant to be a start of a discussions with government. Like, it's not meant to be conclusive. But so transparent. So the debate will have to be had as to how each of one of the six get dealt with. So, but as far as I'm concerned, transparency would, or an understanding who owns what, definitely would reply to, you know, not so rate city. Which one? Who owns which one?
Oh, there's a whole heap of them.
Is there? Yeah, but I agree that the transparency should be across the board. And I have to say too, when it comes to those comparison sites, I think that what also should be disclosed is that you don't get on the comparison site unless you pay the subscription. I mean, like, otherwise, I mean, I don't know anyone in here who's running a brand, but if you know, like, they're expensive. You can't get on there unless you pay a lot of dough. And if you're not on there, it looks like you don't rate. So, I mean, that sort of stuff should be disclosed too as well, as far as I'm concerned. But yeah, transparency, the detail and all this, no one's worked out the detail yet, like everything. And I just wanted to say this is quite important. So, just so you know how this works. So, the Productivity Commission put out their report. The government generally has to put a response to a report. So, if there's been an inquiry, the current government, needs to make a reply. This government probably won't make a reply to the Productivity Commission. They will probably wait until the Royal Commissioner puts his draft report out in September. That's assuming he doesn't get an extension. His final report's not due to February, but he'll put a draft report out in September. Once the draft report comes out, assuming, let's say for a moment it includes the change in our remuneration structure, we then, everybody, the whole country, everyone in the country then has a period of time to respond to the Royal Commission's recommendations, and it gets debated in a political sense. But given there's an election next year, I would say more than likely, because I've got a bit of experience with this stuff, more than likely you won't see any legislation around this, no matter what the responses are and no matter what the recommendations are, until a new government gets elected and they get a settling in period. So I wouldn't expect anything to happen until late 19 or depending on when the election is, or probably more like 2020. Any legislative changes I'm talking about, which is good because it gives us plenty of time to arm wrestle and debate it. The only rider I'll put on all that, because that's a good thing for us, but the only, assuming that there is some recommendations that do it adversely affect us, but the only rider I would put on that is if Labor wins, they may reinvigorate the Royal Commission and extend its ambit, because they've been talking about that, and sort of, you know, start legislating around some of the recommendations quickly to show that they're on the ball and, you know, that the Royal Commission really was their original idea. And I would say this to you, by the way, I've been on the Financial Services Advisory Council, which was established, you know, it's a council of 7 or 8 members, depending on various things, made up of the Reserve Bank, the regulator, a couple of banks, non-bank, and some investment banks, and, you know, and it advises every government. Doesn't matter whether it's Labor, Liberal, whatever. It's no longer in existence anymore, but it was up until 2012, and we used to meet every 6 weeks. The government used to run it, and I remember sitting in front of Wayne Swan in 2010, saying to him, "Wayne, you should hold a Royal Commission," and he said to me, "There's no way in the world I'm going to hold a Royal Commission." He said, "Because I've already got the mining lobby against me," because he brought in the mining tax. He said, "I've already got the mining lobby against me, and there's no way in the world I want to have the bank lobby against me as well." And at the time, the Liberal Party was saying, Joe Hockey was saying, we should have a new inquiry. They weren't saying a Royal Commission, but they're saying a new inquiry, like the Campbell inquiry. They wanted another inquiry. And they put out a 9-point plan. And so Liberal was saying to do it, Labor saying don't do it, they were in government. The moment that parties swapped over and Liberal got in power and Labor started saying, no, we should have a Royal Commission. And which goes to show you the folly of politics, and it's the folly that I'm worried about. The folly could turn around to bite the weakest link. And we right now look like the weakest link because we are not together. We are not banded together. We're disparate, we're spread, where individually we don't have a lot of clout. That's what we've got to fix.
Excellent. That sounds like a very strong call to action for it was a mortgage industry forum Facebook page. Yeah?
Facebook
Okay,
page,
great. We have just one more quick question. Yes.
Mark, hats off to you. I think you've touched upon something that I think at a very broker level we haven't really addressed. And I think there's not a single point you made today that I can dispute. I think it's something that we really need to get up and do on our own. One of the points in terms of this soft dollar thing that keeps coming up in conversations with brokers is even this diamond, you lose your accreditation, you don't put a loan through to CBA in 12 months. This entire discussion really has become one which has just slipped under the carpet, which is actually a volume-based discussion, which is penalizing brokers for actually supporting the client in placing them in the right kind of loan structure. But it never comes up in any discussion as to brokers that favor a particular lender and keep pushing a lot of business their way actually get preferential treatment, which doesn't actually account in terms of a dollar outcome.
That's a good point.
Yeah.
So that's a sort of another, I haven't really thought that through before, but that's another version of soft dollar. It's not dollars, it's preferred treatment, for example. I guess, yeah, that's an interesting one. It's sort of, I guess it is unfair to the customer or the consumer who goes through a broker who doesn't have that preferential position. So it's unfair in terms of people getting approvals. It doesn't create dangerous or bad behaviour though. Maybe that would be the argument back. It doesn't necessarily mean, it means that a customer doesn't get the best outcome, might not get a deal with CBA. If CBA is giving preferred treatment, for example, I don't mean to pick on CBA, it could be Westpac, it could be anybody, but it doesn't necessarily follow. But it also means that, CBA might have the best deal. And because I'm not a broker who has this preferential freeway into the credit department at CBA, I have to send this particular client over to Suncorp who doesn't have the same deal, which that sort of makes sense. That's a good point. I haven't thought of that. That's a very good point. I'll raise that with our forum.
Excellent. Well, it's good to end on one that you haven't thought about. So it's good. It gives us food for thought for Mark and for everybody else. Ladies and gentlemen, that's all the time we've got right now. Please thank Mark Boris for coming in and tackling all the hard issues. And also don't forget our other speakers, Siobhan Hayden and Janine Leafe, and of course Dino Pacella for organising this National Finance Brokers Day. Remember, Mortgage Industry Forum Facebook page for Mark and everything he was talking about, and also National Finance Brokers Day page. Thank you everyone watching at home. We've had I think over 1,200 likes, posts, comments, etc. and sharing. You can watch this again in slow motion if you want on Friday afternoon before you go for Friday drinks, whatever you want to do. It's going to be on the Facebook page. Please share it. Hopefully have a bigger event next year. Tag NFBD in all the other social media except for Tinder. Thank you very much. And that's pretty much it, ladies and gentlemen. Thank you guys all for attending. My name's Sam McCool. Have a wonderful afternoon. Thank you.